Hi everybody, Alex Deployer from Expert Forex, and in today's video I'm going to show you a brand new tool that Expert Forex has made available to manual as well as robot traders. And that is a tool to control your trailing stops or your break-even stops. Now I'm going to explain what a trailing stop and a break-even stop is a little bit later by using a very practical example. But why do traders need trailing stops or break-even stops? And the main core reason is they don't know how long a trend will continue. As simple as that. So they're in a trade, their target is, let's say, 30 pips away. They're nicely positive and they have to make a decision about, do they close the trade straight away? Do they give the trade enough room to reach its target? And that's where trailing stops come in very nicely, because it gives them enough room for the transaction to move, but yet protects your profits. Now, there are four very, very powerful strategies that come out of the use of trailing stop. And those are the strategy to protect gains. That's more or less what I described earlier. The other strategy is to trade without a target. So in other words, eliminate the target completely and let the trend just continue, and you just follow it with a trailing stop. The other strategy is to just create risk-free deals. I can't overestimate the value of risk-free deals. Absolutely the most amazing and the most beautiful things in trading. And that can also be used as a way of reducing the initial stop. The initial stop that you've put in, you can actually reduce that using trailing stops. And I often refer to them as following stops. Okay, so let's have a look at this example. This is a trade. You can see that it's still actually active and going, but let's start out right here in the beginning. So the trader saw a fantastic divergence. Can you see the peaks of the momentum indicators going down? The peaks on the price chart is going up. So that's a momentum. It's a sign of a potential reversal, just a potential reversal. And then the trader saw this trend line violation where you join all the turning points, and the momentum indicator went over there and closed over there. And that is in fact one of the most powerful signals in trading. And the trader would then enter over there, and I've got the entry marked there, and the trader would put a stop, let's say just above the previous high. So a sell was entered into there with the original stop being there, and no target because the trader didn't know where to put the target. Okay, so let's take it from there. So on the next candle, this is, by the way, this is a 4-hour chart, so these things actually happened over a couple of days. So that's what's nice about trading the 4-hour chart. You can actually update the activities on an ongoing basis. So the first candle there was a nice long one, but the second one was even longer and resulted in a plus 37 pip gain. Now at that point, you don't want your transaction to reverse and hit your original stop, because that is 40 plus 3. You will have given away 80 pips to the market. So the first step to do, and you don't have to use break-even stops, and I'll explain, break-even stops are actually the same as trailing stop. But what you would do then is you'd put in a break-even stop at, say, plus 30. So when my transaction goes plus 30, bring in a break-even stop, so that if the price reverses, I will not lose, I will get out at break even. That's the purpose of a break-even stop, and that's how it works. There is a real refinement on break-even stops where you can actually say, well, I don't want to just break even, maybe I want to make 5 pips profit. So there's the break-even stop, but you can say, no, give it 5 pips stop profit. So it's not truly a break-even stop, it becomes a 5 pip profit stop. But that is the first step that you would do when you trade these kind of transactions. So that gives you an idea how break-even stops do work, and what they do, they effectively cancel out the original stop, because now the price cannot get to the original stop. It hits into the break-even stop and gets out at break-even, or whatever profit you want to set for it. So in this case, we're assuming that there's a break-even stop at the true break-even after the transaction went plus 30, so it did go plus 38, so the break-even stop applied, and then the price started reversing, but luckily it didn't hit that break-even entry that existed, and it then continued. Interestingly enough, another 2 long candles happened again at that point, or any time after you have entered the deal. So any time over there, you can enter a trailing stop. Now, let me explain how this particular trailing stop works. It is a 50 pip trailing stop. In other words, it will trail the price by 50 pips. But it will only activate when the transaction is plus 60. Now, and these are specific settings that I'm using here. Obviously, you can use whatever settings you want, but the principles apply. You enter it with a size of the trailing stop, and you enter it when should the trailing stop activate. And we say when it goes plus 60, we want to activate this trailing stop. So it did go plus 60 over there already, and then it went plus 88. But at that point, a trailing stop of 50 would have been activated, and with a 50 pip trailing stop. In other words, if it reverses from plus 50 backwards, you'll still walk out with 10 pips profit. But now that it's gone to 88, it is now it's got a 50 pip trailing stop, so you're now up to about 30 pips have now been secured. Now there's this one point where it says steps of. Now you can put trailing stops to increase by every pip. So in other words, if the price moves 1 pip forward, the trailing stop adjusts 1 pip trailing, or you can do it at 5 pips or 10 pips. In this case, I'm using 10 pips, but you can use 1 pips. The brokers sometimes don't like this constant updating of stops all the time. They complain, so we try to keep gaps of, let's say, 5 to 10. Yeah, so in this case, I'm using 10. So in other words, what it's saying is the price must increase by 10 or more before the trailing stop moves. So it will stay where it is until the price increases by another 10, and then it will move up. That's how the step system works. So and I've drawn in these lines, they're more or less guides of how the trailing stop moved down. It didn't move, it moved in blocks of 10, just to give you an idea of how that worked. So anyway, so it got to plus 88. It then went up, but the trailing stop would have been around about there, plus 30, so it was nowhere close to the trailing stop. And then it went and created a whole lot of another red candles. Look at those, 2 reds, and then 3 really good reds. And it then went to 138. Now at this point, with this tool, you can change the settings. So what I would do here is you change it to a trailing stop of 40. So the price has to reverse 40 to be stopped out with steps of 10, and that's what happened there. So I'm just like squeezing the price into a more narrow range. So it went on, up and down, and then created 4 really nice red candles going down, and went to plus 208. Now at that point, you don't want to have big stops, so I reduced my stop to 30 pips with steps of 10. That means that I can now, if the price reverses, I will bank at least about 180 pips. If the price continues, however, I'll just keep on making more and more money. So that's the beauty of trailing stops. And that is exactly how they work. So let's go back to the previous slide, and we look at these strategies. So protect gains that are already made. Now I've actually just shown you that how your gains that you've already made are locked in, and your stop actually is moving down and down more and more. So that's the one. Now I've also mentioned that in this trade we don't have a target. So you can either get stopped out by a reversal by a retracement, or the price can just continue to go down and down and down. And that's the beauty of the trailing stop strategy without a target. Nobody knows when the trend will stop, and the trailing stop can just keep you in the deal all the time. So that's strategy number 2. Then creating risk-free deals. Now, the minute you move your break-even stop to 0 right in the beginning, you have created a risk-free deal. In other words, you can't lose. You can only win. And the more you use the trailing stop, the more it becomes a risk-free deal. Now, those are fantastic deals to get into, just from a risk-return ratio. You know, if you're making profits without having any risk, that's what every trader wants. And then reducing the initial stop size on positive moves. So let's go back to that chart. So what I could have done right up front is I could have put in a trailing stop of, let's say, 40 pips, a trailing stop of 40 pips with jumps of 10, right at the point of entry. So what that means is that if the price starts going positive, it pulls the original stop or the trailing stop down, so my stop will start coming down from there, down to down all the time as the price goes positive. So that's one way of reducing your original risk as the price goes positive and positive. So you can actually put a trailing stop in right in the beginning, and you don't have to put it in after it's reached a particular point. But the correct way of using trailing stops is to put your break-even stop or your trailing stop in at the just after you've entered your deal. In fact, now I'll explain a little bit. Your break-even stop is nothing more than a trailing stop with a break-even target. So if you say after, so it actually becomes superfluous. I in fact don't use break-even stops. I use trailing stops for all my transactions. Okay, I hope that gives you an idea of how trailing stops work and how they can help you achieve really good results from any trends that you enter, that you're not sure when those trends will end, and you let the market decide. You put a trailing stop and you just let the market decide. If it's going to reverse, it takes you out, but you're profitable. If it continues, you make super profits down. Okay, now this tool is a fantastic tool, and I'll show you why. The tool can be used for manual trading as well as robot trading. So for manual trading, when you activate the tool, all you have to do is put in the reference of your deal, which is your order number. So you just put in your order number, and the EA will say, oh, I must manage that order number, and it will manage that order number for you based on your trailing stop settings or break-even stop settings. Simple as that. But it can also do the same thing for robots. So you can also, if there's a transaction that your robot has opened, and let's say this particular robot that you have doesn't have a trailing stop or a break-even stop facility, you can then activate this EA, and it will manage your transaction based on trailing stops and break-even stops. Fantastic, isn't it? And then the other thing is, what if you have an EA that just opens a whole lot of transactions? Let's say you have 5 or even 10 open transactions at the same time. Tool will manage all of them at the same time. All you have to do is tell it which magic number is controlling those transactions, put the magic number in, and the trailing stops and break-even stops get added to those transactions automatically. Fantastic tool. So it's good for robot trading as well as manual trading. So let's have a quick look at the input section. It is a gift version. And I'll explain that a little bit later. And it's very, very simple. It needs you to put the ticket number in if you are going to trade control one transaction at a time. If you're going to trade a number of transactions, you can put a magic number in there. So it's fantastic. You either put a ticket number or a magic number in. In this option, you basically tell it whether to use the reference or whether to use the magic number option. So it's very simple. Those settings link the EA to the transactions that you're trying to manage, and it will then apply the settings that you use. So for instance, in a break even, here's some break even settings. So it says move the stop loss to break even when it is plus 40. Now you can overdrive that, and you could also say lock in profit at break even move. So in other words, when it reaches 40, don't ignore break even, apply 10 pips. So in other words, it will not use break even as this exit, but plus 10 as it exits. So it's a bit of a trailing stop, as you can see. And here's the proper trailing stop settings, which are pretty straightforward. Start trailing when the profits are, let's say, plus 50. Trail by 40 by 30 pips, and these are defaults. You can obviously change them to what you want. Trail by 30 pips. So in other words, when it's 50 and you're trailing by 30, it means you've basically locked in 20 pips straight away. 20 pips. Your transaction is guaranteed to be plus 20 pips, and in this case the stepping is 5, so it's going to adjust the trailing stop every 5 pips. Very simple EA. It's not meant to be a highly sophisticated one. It's meant to be nice and simple and understandable. There are lots of options that we could add to this particular one. This is, bear in mind, this is a free one, so we're keeping it as nice and simple, especially for manual traders. It's really good. Now I've included the definitions and more explanations about break-even stops, and just pause the video if you want to read through this. I have tried to explain it in that example, and the same thing for trailing stops. Here's a few more description on how they work. Again, just pause the video if you want to read that. Now, where do you find this particular EA? And it is an EA, it's not an indicator. It actually is an EA because it controls the trading activity, and it is under the premium indicators section in our premium member forum, which is a paid forum, and I'll give you details about that. But there's a whole lot of premium indicators that we've loaded already, and there it is. It's the latest one that's been loaded: automated break even and trailing stop tool for manual and robot trading. So that's where you can go and get it. You have to get into the paid forum, and quite honestly, it is $20 to join the paid forum, and you get access to so many, and we're going to be adding a whole lot of more indicators and EAs into this particular section. So if you want to go and join it, just go on to our Premium Advantage forum. There it is, become a premium member, $20 a month. You don't have to join for the whole month. You can cancel after your first payment, but then remember, you are going to lose out on upgrades on these, because when we send them out, we get a lot of feedback, and people want to add little bells and whistles and things like that. So we're doing upgrades to these indicators and EAs all the time, and you're also going to obviously lose out on future free indicators that we post in this particular forum. So that's where you go. The links to everything that I've mentioned so far will be in the commentary and first comment of this video. Now, I hope you've enjoyed this video, and from me, Alex Deploy, cheerio.